Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
There's plenty for us to get into this week, but to kick things off, let's recap what happened this week in the markets.
Sure. If we start with the cattle side of the equation, if we look at cash-fed cattle, down about $1.25 for the week. Feeder cattle also lower this week. I'd call them steady to $5 lower as we went through this week. When we look at the beef side of the picture, the choice beef cutout value was up about 82 cents relative to a week ago. That's still 10% higher than where we were a year ago on that choice beef cutout value. That choice beef cutout value finished Friday at the highest level we've seen since August 10th of this year. And we're really up nearly almost $10 from the low that we saw back on September 13th of this year, as we've gotten stronger ribs and brisket prices over the period that have helped pull that choice beef cutout value higher. So good news in terms of higher choice beef cutout value. If you look at futures markets this week, I'd call live cattle futures current contract down about 75 cents for the week, while we lost nearly $2 on the current feeder cattle contract. Switching to the hog side, more good news for hog producers this week, with cash hog prices $3.25 higher for the week. The current lean hog futures also finished stronger this week, up about $2.50. The pork cutout value also higher again this week, so 73 cents higher relative to a week ago, and that puts it 1.7% above a year ago level.
As we take a look at those numbers, I have one quick question. Specifically, if we look at the wholesale values, the cutout value, the retail or the wholesale or the beef value, how important are those to supporting those futures contracts and maybe giving those contracts and those markets a little bit of support as well?
Yes, I think we are seeing some support there to those futures contracts. And I say that because who would have thought we would be delivering this amount of increased supplies of beef and pork to the marketplace, and be talking about, in both cases, wholesale values that are actually exceeding where they were a year ago at this time. I think that has been astonishing, and just again goes to the fact of what's been some pretty strong demand out there. So markets continue to see this news of big supplies coming, and then at the same time we get wholesale values that frankly have been very strong relative to the strong growth that we've seen in supply. So I think it's been very important in providing support in those futures contracts as we're going through the latter part of 2017.
Big reports came out this week. We'll talk about cattle on feed, which is kind of the elephant in the room as we look at those reports today. But let's start first and talk with livestock slaughter numbers, which came out earlier this week, and really maybe from a production standpoint to show that we're still producing and we're a solid producer. But how much pressure is that going to put on those prices that we are continually keeping our eyes on?
Yeah, so you have to be worried, I guess, when you're starting to set record red meat production. Now, I say that and I go, I want to be careful about not being too negative about that, because when you think about what's been growing international demand for U.S. meat products as well as the stronger domestic demand, we are going to hit records. We do have population that's growing in this country and around the world. So I think it's a good thing that we have industries that are hitting, record highs, but we did hit the second consecutive month in a row with an all-time high. We came in at 4.4 billion pounds of red meat production. Those things are usually spell trouble for us in the livestock industry when we do that, though. And recognizing that perhaps 2017 is different than what we've been through in the past is maybe the good news when you think about the kinds of record supplies that we've been bringing to the marketplace.
When we get into those numbers, I think some of the things maybe that jump out at us from that the livestock slaughter numbers are the weights. How does that figure in, and what are we seeing on that side of things?
Yeah, so if we look at cattle dressed weights, we were up 9 pounds relative to a month ago for those September numbers. We came in at 829 pounds when it was all said and done. That is still 8 pounds less than a year ago. It's the closest we've been to a year ago since February, however. So one of the things that I had talked about very early on this year was that if those weights started to move higher, I'd be worried about prices. And that's in fact what we've been doing. If you look back in February, we were 22 pounds. Back in May, we were 22 pounds below a year ago then. And so bigger slaughter numbers didn't equate to quite as much beef production. Again, it's just a testament to we've been really good at moving product through the system. So even though those slaughter weights have been increasing, we've been able to deal with that additional production. Even on the hog side, very similar situation. Hog weights gained 3 pounds in that report. Got to 211 pounds on a dressed weight basis. That's 2 pounds greater than a year ago. We really have to go back to February of 2015 to find a month where weights were 2 pounds or more above a year ago levels. So we're getting increasing weights occurring there. And I go, when you got corn prices setting at Omaha, Nebraska at $3.09, I believe was kind of the current that I saw, I'm not surprised to see us adding more weight to these animals as we look at the numbers now.
Scott, I have a question. As we look at, we know domestic demand needs to grow, but it's been fairly solid. We're still a big player on the global market. When you look at countries and some of the issues that are going on, I think about Brazil, and there is more plant closures today with that whole big JBS issue and lawsuit that's going on. Does that present an opportunity for U.S. beef producers to maybe gain some ground on the global marketplace and pick up more of that global share?
I think it has been helpful when you look at the things that have gone on this year. We have had opportunities to, I think, grow some market share in a number of key countries. We're more than happy when you have these kinds of supplies occurring in the U.S. to see other countries have hiccups in terms of their ability to deliver through plant closures or whatever the case may be. However, I take a minute to remind ourselves, it tells us how much we want to avoid a disease event that shuts trade off right now. If we have that same kind of supply hiccup occur now in this country where we're somehow shut out of markets, I don't want to have to think about what happens to prices under that scenario. So it's really, really critical that we pay attention to what we're doing on the trade front right now.
Let's get into the cattle on feed report from today. Another big number came out in that report. Let's get into some of those numbers and talk a little bit about what that means as we look ahead to markets Monday morning.
I was hoping you weren't going to ask about this report today because I don't think we have much but bad news to talk about here a little bit. However, I will keep it framed appropriately. Yes, placement numbers were big, up 113.5% relative to a year ago is what we got out of the report. The pre-report average trade guess would have been at 107.5, so we got well outside the average guess. We did stay within the range, but we had a fairly wide range in terms of cattle placed in September. It kind of comes back after what was a better report for August to come back and now say, no, we've got a lot of cattle and we placed a lot of cattle here in this last month. I think I know where markets are going to open on Monday. We'll see how long that stays. Even the on-feed numbers, when you look at October 1 on feed, setting at 105.4, that was also above the pre-report estimate. So more news of larger supplies of cattle that we get to deal with over the next several months seems to be what we're seeing out of this cattle on feed report. And I expect on Monday we're going to get some drag on markets as they try to come to grips with bigger supplies. Now, I go bigger supplies that came or a bigger supply report that came when we had a really good stock market day and really good general economy day. Maybe demand continues to push along and we continue to see prices that don't fall considerably as a result of these kinds of reports that we see today.
Scott, we know there's a lot of cattle on feed, obviously. But as we look at that, how does that break down when we look maybe at steers and heifers and what do we take from that assessment?
Yeah, so actually I think this is a good story in terms of what's happening in terms of heifer numbers. So when you look at the quarterly data that we got today on this cattle on feed report, so heifer inventory of October 1 data says heifer inventory is up 13% relative to a year ago, while steer inventory is only up 1.6. So it tells you we've got a much larger percentage of that cattle on feed inventory that is now female. When you look back a few quarters ago, we talk about that number being more like 31%. in terms of the percentage of heifers relative to that overall inventory. And today we're sitting at 36%. So that tells me we're starting to slow down that growth in beef cow inventory. Now, don't get me wrong. I do believe January 1 of 2018, we're going to be higher in terms of beef cow inventory in this country. But it's starting to set the stage in my book for a slowdown or potentially a flattening of cow inventory as we get into 2018. So less supplies, maybe as we get into the latter part of 2018, could be in the offing as we look at the data that we got today on cattle on feed.
Scott, anything else we need to touch on in that cattle on feed report?
I think you've covered a majority of what's there. We'll just wait and see how markets react when we open on Monday, but it's likely going to be pretty negative out of the gate.
I have to take a deep breath. So we've had a little bit of a negative conversation today. I want to end on a high note. One of the things that I noticed as we get into cash hog prices really in the last few weeks have seemed to turn a corner.
Yeah. So I go a couple things that seem to be at play right now. Number one, I think packers are being pretty aggressive to keep plants as full as possible. So packer margins, I think, have been narrowing a little bit as we look at what's been happening of late. After what was, really, if you look back at mid-July where we were setting at national base hog carcass prices at about 80, near $90. They fell for 2 or 3 months until we hit a bottom here back in early October of about $57. And we've now gotten cash prices, when you look at where we ended today, back in the low 60s. That's a nice turnaround. And I don't think you can just equate all that to what's been happening to packer margins. We talked early on about just the wholesale beef cutout value, wholesale pork cutout value, I'll get the right commodity, actually moving higher of late. And I think that's been helpful. So I think as those in the marketplace are looking at these wholesale pork prices, they continue to remind themselves that demand has been very strong, even though we have had some pretty large runs of hogs.
And seasonally, it's probably only going to get bigger as we get closer to the end of the year?
I think we have some opportunity for bigger runs to come before we finish 2017.
Scott, next week, the only report really we're looking forward to is cold storage, which comes out on Monday. What are some things maybe we're looking to see from that report?
Yeah, so I think as we look next week at cold storage again, it's pretty similar of, I hope we don't find a buildup of beef or pork in freezers. I don't anticipate that's going to be the case right now, but that's going to be the early indication if we start to see some slowdown on the demand side, if we start to see some growth in freezer inventories of beef and pork. So let's hope we find some good news, and demand has been pretty strong for what's been growing meat supplies we've been bringing to the marketplace.
Be plenty for us to talk about next Friday. Have a great weekend.
You too.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there if you have them. And for market updates twice daily, make sure to check out John Perkins. Have a great weekend. I'm Megan Grebner on Brownfield.